Hi, I'm Courtney McQuade with Markets Group here at our ALTS New York event. With me is Doug Krupa, Managing Director and Head of Global Wealth Solutions at KKR. Doug, it's great to see you.
Wonderful to be here. Thanks for the time today, Courtney.
Absolutely. So you just came off a panel discussing the alternative space here for private wealth specifically, basically the democratization of alts for the private wealth space. What were some of the key things that you heard there?
Yeah, thanks for the question. It's an interesting time for the industry. You know, we're seeing a lot of adoption from asset managers and increased incorporation from advisors and families into alternatives, and I think we're sort of at a unique cross-section. For a long time, and I've been in this industry for a couple of decades, trying to really increase the accessibility of all sort of building blocks in private markets, but it really feels like we were pushing that boulder uphill for a long period of time, and now that boulder is sort of coming down the hill. Just a lot of enthusiasm. We've seen some real innovation in product structures. We've seen, we've gone from diversified to sort of direct kind of access, us providing the same investment content of our institutional vehicles, but in evergreen format, which I think, again, is helping folks achieve their strategic asset allocation and have more building blocks to do private markets.
Interesting. And when it comes to the opportunities or risks in the space, what are you thinking about that?
Yeah, this is delivering private markets or increasing accessibility doesn't come without complexity. And I think, for organizations in terms, you have to be really committed to the space. You probably need to have a large distribution team. There's 300,000 advisors and RIAs in the United States alone, thousands of sort of family offices. That requires a big commitment. And then sort of delivering what you've been doing institutionally, the structures and the format has sort of changed. You've gone from sort of calling capital when you identify a deal to really being what I would call, Courtney, is on the treadmill. You have capital generally closing every month. You have periodic liquidity. You have to think about, how do you manage for that liquidity? How do you keep that capital at work? It's got to be deployed. It can't be sitting in cash. That's going to erode your return, your value proposition, and those outcomes that we're hoping to deliver in these asset classes. So it really does require a pretty big reorientation from the investment teams to really the strategic leadership of a firm, knowing this is an important initiative that requires a lot of time, attention, and resources to really do this right. And I think I think the industry is excited about it for all the right reasons, and I think they've shown that commitment, but it's something you sort of got to watch closely.
Watch closely, that makes sense. And Doug, you've been here now for most of the day. I have to ask you, how are you enjoying the event so far?
This is a great conference. It's really bringing us together with advisors, with RIAs, with clients and intermediaries that we're really talking about how to make private markets more accessible. What are those roadblocks? What's also around the corner? What are we thinking about next? I think we've done a great job, again, bringing private equity, private infrastructure, private credit, and private infrastructure, a few of those more recently, but we're still doing that largely on sort of a transactional basis. We're sort of on the 1 yard line of doing model portfolios, discretionary pools, and of course there's a lot of chatter and potentially regulatory change that may enable defined contribution. That's probably not an immediate sort of opportunity, but it's one I think we're ultimately going to be able to kind of combine what we do, which also really matches the duration. We're talking about investing for control, for long duration with multi-decade sort of savings for retirement. And that's something that's at least missing from DC, but it's been done very successfully in defined benefit plans for many, many years.
Well, fantastic, Doug. Thank you so much for taking the time to share your thoughts.
Thank you so much for having me, Courtney. Have a great day.
You too.